Are you considering investing in real estate or stocks, but you're not sure which path is right for you? In this video, we'll explore the pros and cons of each investment option to provide you with the information that may help you in your decision-making process towards financial independence. Hi everyone, my name is Parul and welcome back to my channel Ask Parul. If you're new here, smash that subscribe button and sign up for my insider list to get all the latest updates. Let's dive into this 10-pointer guide comparing real estate versus stocks. Please note that this content is only for information purposes and does not constitute a financial advice. Investing involves risks, including the potential loss of principal. Past performance is not indicative of future results, and please consult a qualified financial advisor before making any investment decisions. So the first pointer that we have is time horizon. Real estate is often viewed as a longer-term investment. Historically, real estate has appreciated over time and can provide a rental income if leased. If you look at stocks, then stocks is suitable for both long-term and short-term investing, and stocks can be bought and sold relatively quickly, offering more flexibility in investment duration. The second pointer is around return potential. Now, real estate potential returns can be enhanced through the concept of leverage, wherein you are taking the mortgage against the deposit that you have paid, generally from a bank. However, leveraging also increases the risk, so ensure that you're aware about it. Stocks, on the other hand, have historically offered competitive returns. The global financial data indicates that stock markets have performed on an average annual return of about 7 to 10% over the long term after adjusting for inflation. The third pointer we have is the cost of ownership. Now, real estate typically involves significant upfront costs like the down payments and also closing costs such as broker fees. There can be government fees such as stamp duty or land tax, along with the ongoing expenses such as maintenance, property taxes, and insurance. Stocks, on the other hand, have lower entry barriers with the ability to start investing with smaller amounts. Transaction costs are generally low, especially with brokers offering reduced fees. And if you are someone who is interested in real estate but don't have big funds available to invest right now, you might want to consider exploring alternative real estate investments, which is real estate investment trust. It's a great way to get exposure to real estate and other markets, even if you are not ready to buy the property just yet. I have made a previous video explaining what REITs are, what ETFs are. You can check that video out. Plus, the Momo app is really easy to use because it meets 3 criteria that I look for in a good Aussie online broker. Number 1 is CHESS sponsorship. This basically means that you own the shares you buy directly, providing a nice security feature. The second feature is the low brokerage fees. Momo charges $3 per Aussie share and $0.99 per US share, making it one of the cheapest brokerage fees in Australia. If you sign up using the link given below and make a qualified deposit, you will receive up to 10 free stocks and 6.8% per annum cash interest for the first 30 days. Additionally, you can receive a brokerage free card worth $4,000 just by completing your first buy order. The fourth parameter that we have is taxation. Now, real estate may offer tax benefits like deductions for mortgage interest or depreciation, but that totally depends on the local laws and your country of residence. So ensure that you are aware about those. Now, stocks, if we look at, they generally are also taxable. The dividends and the capital gains are taxable, but the tax treatment also varies depending on the investment duration. So for example, if you have held for a long term or a short term, and then there are regional regulations as well. And note that if you're watching this video from India, or if you are an NRI, which is non-resident of India, then there has been some recent changes in the tax structure post the budget announcement this year. I am linking this video. Go check that out to understand your tax obligations, whether it's real estate or stocks. The fifth parameter that we have is market knowledge. Now, both asset classes require some level of an understanding and research. So staying informed about market trends, economic indicators, and specific investment details is important for making informed decisions. And like I always say, that never jump into any investment decisions without doing thorough research and without having the market understanding. The sixth parameter that we have is liquidity. So real estate is generally considered as a less liquid asset, which means that selling the property can take some time due to market conditions, whether you have enough demand of the property, and also the process involved in the entire transaction. Stocks, on the other hand, is a highly liquid asset, which means that stocks can typically be sold quickly during trade hours, providing easier access to funds. The seventh parameter that we have is price transparency. So real estate property valuations can be subjective and is influenced generally by factors like location, the condition of your property, and also the market demand. Stocks, on the other hand, the prices are a lot more transparent and they are updated in real time during market hours, offering clear visibility of the investment value. The eighth parameter that we have is passive income potential. So real estate can generate a rental income if the property is leased, potentially offering a steady cash flow and a passive income. Stocks can also provide dividends, which are portions of a company's profit distributed to its shareholders. But please note that dividend payment is dependent on the company performance and they are not guaranteed. The ninth parameter that we have is volatility. Now, real estate prices tend to be more stable in the long run, but it can be affected by economic conditions and local market fluctuations. Stocks, on the other hand, can be much more volatile in the short term, with prices influenced by market sentiments, economic data, and company-specific news. So stocks are slightly more volatile than real estate. The 10th parameter that we have is diversity and divisibility. So real estate requires significant capital per investment, which can make diversification within real estate more challenging. Similarly, it's not a divisible asset. You can't really sell, let's say, a bathroom or a kitchen. You have to sell it as an entire property whenever you're selling. Stocks, on the other hand, allows for a lot more diversification across different companies, industries, and geographies, even with the modest investment amounts. And there is always a concept of divisibility. So let's assume if you want to sell 10 of your 100 stocks, there is that option, right? So what's the conclusion? Well, I feel that choosing between real estate and stocks totally depends on individual financial goals, your risk tolerance, investment horizon, and the available capital. But here are the few factors that one can consider. Number one is the concept of diversification. Including a mix of different asset classes such as real estate and stocks in an investment portfolio can help manage risk and potentially improve returns over the long term. So the second factor is around starting point. So for those who are beginning or still early in their journey with limited capital, stocks or mutual funds might be more accessible, and over time the investment gains could contribute towards larger investment like the real estate. And the third pointer to consider is the alternate options. Like I was talking about REITs, which is real estate investment trusts. They offer a great way to invest in real estate without directly purchasing properties, combining aspects of both the asset classes. But please note that it's important to conduct thorough research or consult with a financial professional to determine which investment aligns best with your personal financial situation and your long-term goals. So now that you're familiar with comparing stocks and real estate, if you find that stocks might be a better fit for you, but you're unsure about the complex investing terminology, I have provided an explanation of all those terms where you can understand these jargons pretty well. The video is here. Or if you're interested to learn more on real estate, then keep an eye on my upcoming video on buying versus renting, where we will discuss the factors to consider when making housing choices. To stay updated, make sure you subscribe and sign up for my insiders list. Until I see you the next time, goodbye.